To kick off today's show, everyone who's a trader out there has got their own process, their own methodology for going and working out what trades to go and get involved with and what to go and avoid. To go and kick off today's program, what's the process you like to go through?
Well, thanks for having me on board, Scotty. Really appreciate it. So, as you mentioned, hit the nail on the head. Every trader's got their own, I guess, set of rules that they follow. My set of rules is I've got a few indicators that I look at, and before I do get into the charts, I really wanted to explain to our viewers what those indicators are, so that way they can kind of follow with us, you know, what I'm looking at and kind of see from the same lens. For me, it's all about support and resistance. In a nutshell, that's what it's all about. There's different forms of support and resistance lines, and I've got a few different ways of showing that through trend lines, areas, Fibonacci's, and even just the diagonal trend lines and whatnot. So happy to get straight into it.
All right, well, let's go and let's kick off with the biggest of the big when it comes to the stock market, at least, the S&P 500 in the States. All eyes on this particular index. We know that's fallen to a bear market, down 20% plus now from the recent highs. You can see here you've got your trading rules up there at the moment. I like the first one as well. Keep it simple.
Yep.
Very, very easy one to go and understand, but one that's not always good in practice. On the charts, though, I can see that it's gone and broken a few of moving averages there. What are you looking at now from here?
So, like we can see the level there, and that what we call that is a supply-demand area, which is that yellow zone. It pretty much replicates a support and resistance line. However, with a support and resistance line, you're just limited to that one particular level. I like to show an area which price can move into and cause some sort of reaction. So we can see that price at the moment is sitting around that 3,700 handle. We're probably going to see a bit of a reaction. We can see that descending trend line. We don't know what's going to happen, given that the Feds are coming out tomorrow with a rate hike. Rate hikes are positive for the US currency, so we could see a bit of a rally. And I've got there, rate hike in the fundamental side, rate hikes, earnings season, and high inflation. So I've got in my steps, in the technical steps, I've got 1, 2, 3, 4, 5, 6, which is kind of what the outcomes might be. So if I look at the first one, we've got that 3,700 support area. If it breaks that, we're looking at the next one, which is around the 3,300, which is that next supply-demand zone. And as I mentioned as part of my rules, I like to look for areas of confluence, which basically means areas where different indicators line up together to show a high probability trade. So I've got pivot points here, which again is another form of support and resistance. We've got the trend lines, we've got the EMAs, and we've got the supply zone. So if we see the break of this 3,700 level, we could be potentially seeing the next bottom around that 3,300. So again, that's what we're looking for. And if we see that happen, a confirmation would be a break of that level and a retest.
Okay.
So it'll go down, it'll go back up, test that level, and that'll give us some sort of confirmation that it's going to be heading back down. So that would be something or an indicator that I'm looking at. And you can see the 200 EMA as well there, that red line. That's the long-term moving average. So we could see price again moving towards that red line before moving to that supply zone. So a few, again, different sorts of support and resistance, but I'm seeing some sort of maybe reaction around the red line and then towards that yellow line at the bottom around that 3,300 mark.